All right, cool. So we're just going back. So we just resuming with the internal, external thing, right?
Yeah.
All right. So if we're just only on one, like on a one-sided, let me see, can I draw that? Did I delete it? Did what else recent? Okay, there we go. All right, so basically, so you're always like internal here, external here, right? This is your external point. Then there's something internal here or external. If something is not balanced, then this becomes the internal point. All right, so internal, external. If you're looking to your left, there's areas that's I have mentioned this before. There's areas that strong points that haven't been mitigated yet. These strong points will then mitigate. All right, but to understand, like if you're still continuation in the direction you are, or you're reversing, that's when you hedge your trade, because we don't know if this particular strong point is going to completely take out this trend line. So we're going to play the reaction. So you're still going to trade here because this is our main bias, but we could potentially reverse the market completely here. All right, that's another reason why I take partials, because if we're trying to hold these trades full targets, sometimes, yes, it happens, but I just prefer to be on the safe side and take partials. All right, that's just my personal trading plan. Like I take partials. All right, so we're going internal, external on this side, and then on this side, we going internal, external on this side as well.
At the same time, when price is taking out liquidity, it is also at the same time reacting from a strong point here.
Yeah, that's what I mentioned. Like this would be a strong point.
Okay.
This would be the inducement to that strong point. It's the same thing. It's the same thing that's going on right here. It's going on the left hand side. So we have a strong, like say this was my strong point, right? See, we had liquidity taken, strong point mitigated. Your take this sell expectation is to take this low, but what we done, we took internal liquidity here. So now what it looks like is we need to be balanced here. We took out liquidity. We had a boss, right? We still play the reaction because this reaction still can take this low, but we also recognize that we have liquidity here and that this can cause a reversal. This will be that trend line that's created. We tap something strong enough to break that trend line. So we have something here strong enough to break the trend line. We break the trend line by tapping into a POI and taking out liquidity here. We have liquidity here. So now we're external. This is internal. Now it comes down, it goes internal to external. The reason why I don't go into like explaining internal, external liquidity is because we're already doing it with strong highs and strong lows. I try to avoid making this complicated. If it makes sense, like I'm trying to avoid it from being overly complicated and trying to pinpoint internal, external areas. All right, so I just use strong points and balances. Because if you pay attention to when we're balancing the markets, right, as you can see, this is a strong point. This will be internal on this side. So this took internal liquidity. But as you can see, we still need to be balanced right here. And we just broke the structure point. So now this is internal liquidity. See, I don't want to say all this and confuse you, because this will then start confusing some of y'all. So this is internal liquidity. Oh wait, I don't know why I did not draw from. Okay, this is internal liquidity. This is internal liquidity on the left side. This is internal. We go internal. We balance the market. See, same stuff without having to worry about internal liquidity. Now we go external. Now when we go external, what would be the next internal point? All right, well, we have internal right here. We have a strong high up here. All right, so now it's internal over here. That's why we get a reaction. And look what happened here. Have internal right here, internal liquidity. You take out the internal liquidity. Now we go external. Why we tapped here and started getting a reaction? Well, if we go to the 15-minute, same stuff. All right, we take in I went to the 1 minute, right? And we seen on the 1 minute that this was our POI. We had internal liquidity down here. So all we did was just balance the market. Now we went in, now we go internal here. And now we want to go internal here. So now this may be internal. This may be our internal point. We may tap here, continue going, or if it did take enough internal liquidity here, right, then we will see maybe external. That's why you hedge your trades, because we don't know if this overall sell will completely take out these lows. Again, they look like equal lows to me. They're relevant equal lows, so that could be resting liquidity for us. See how that would have played out? You would have bought down here, bought here, targeting these internal liquidities to the left, which is external on the right. Now we tapped into an internal point. We took our previous day high. So now this is an internal point, and this can cause the market to completely go bearish. We played a reaction from there.
Sir, here also you have done the same thing, balancing the market.
Yeah, it's the same thing. We're just balancing the market. Okay. That's why I didn't go into explaining internal, external, because I know when I was first learning internal, external, it got a bit confusing, a little bit confusing. So I made it simpler for myself looking at balancing the markets. All right, because it's constantly, back and forth, and you'll catch yourself, trading external, internal, right? You'll catch yourself trading this, and you'll be building a trend line. And then since you're so focused on building trade internal, external, you wouldn't see when something like this happened. So you might see, oh, that was internal. That was my area. It hits that area because it has to be balanced here, but it only balanced to take out liquidity here. And now you're getting trapped. You end up getting trapped because you're taking the sell thinking that the market is going to continue lower. And then now you get stopped out. If that makes sense.
Yes. Yeah.
All right. So you don't have to necessarily worry about internal, external, because we're already doing it. But if just for some of you that may want more of an explanation of it, external, internal liquidity is what's going on. Let's see, even right here, they took out some external liquidity, we took out internal liquidity. All right. And we have this, we take out external liquidity, we took out internal liquidity again. All right, we didn't take anything there. So we go external. As you can see, the external end up taking some of this internal liquidity. Now, this is what we'll call a breaker structure, and it took out this internal liquidity. As you can see, it respects this area. And now we're taking internal liquidity, which is internal right here. And then now we're taking external liquidity. So avoid me saying all of that. It's just like, all right, this is sweep of liquidity. We create this low. All right, we have a high, we have a strong low. We have this wick. We need to balance this wick. We balance the wick. Now this is liquidity. We're start targeting up the higher points. All right, internal liquidity.
That's a lot easier to understand it.
Right. Like instead of saying, okay, now this is internal. Okay, now we're taking internal. Now we're going to take external. Okay, now we took external out, but this is now internal. So if we take internal, then we got to go external. So now we go external. Now this is internal here. So now we go internal, we got to go back external, but internal here. So internal. Okay, now we went internal. Now we got to go external. So now we go external. Like that, it will confuse you.
Yeah.
And then you'll end up having lines everywhere. You'll probably be marking up all these different areas. I try to keep it simple. That's just me personally. I like to keep things a little bit more simpler. So, but that's how it works, though. You're just targeting internal, external areas on both sides of the markets. And then on top of that, keeping up with internal, external, you still got to keep up with previous day high, previous day lows. you know.
Yeah, you start to get confused.
Yeah, you gotta start focusing. Okay, I got breaker blocks, I got the extremes, I got internal, external, I got previous day highs and lows, I had previous weeks highs and lows. Which internal point going to be taken first? What external point going to be taken first? Because there are certain internal points that won't cause a reaction. And that's because the market is just looking to balance. It's just balancing these areas. Like here, we balance an area, that breakout, no retest. So we break out. So this is a potential for pullback. We pull back, this area need to be balanced. There's liquidity. Both things need to happen. It just happens a lot simpler. We could just see it. No, you can see it. So we could just trade it. They got some people with high IQs that really can trade internal, external, just looking at it and be able to trade it. Me personally, I can't do that. So I had to make it simple for myself.
Yeah. Simple is always better, in my
Your
opinion.
concept is very simple, actually.
You
Much
said
better.
what?
Your concepts and the way you are explaining is very simple and much better.
Yeah.
Yeah.
So, and then all this was done without even using our 90-minute cycle. So if I go ahead and place 90-minute cycle onto here, right? 230. I gotta press it up. There you go. All right, we can see that if we only counting the Friday, this would be Monday, Tuesday, Wednesday, Thursday, Friday. So this will be the end of your day. You see, yeah, Monday, Tuesday, Wednesday, Thursday, Friday. This will be the end of your day. Friday calls start the reversal process. As you can see, you can start seeing the reversal right there. So you had the Monday, which is the false direction. So we got the false direction here. We swept a little liquidity, balanced the markets, and then that was our one trade around 2 o'clock, right at 2 o'clock. So boom, you get your sell. Then this is considered our Tuesday. Tuesdays tend to create the high or low of the week. So if we're treating this like the week, this is a Tuesday, we balance the market. All we're looking to do is balance. So we can start to build the narrative that this may be the low from London to New York, right? So we can start building. We see Wednesday. This will be considered our Wednesday. You can see that we get that last sweep of liquidity right before, and now we're just continuing to go higher. Thursday, continuation day. So you can see we're just continuing. Nothing else. We're just continuing. Friday starts. Friday is what, a pullback day or reversal day. So we did get a Friday, the so-called Friday pullback, taking out liquidity, and we could have bought this last time. Still understanding that we was aiming for previous day high and that we're aiming for balance to the left. And that'll be right where we start to see our reversal. So if you traded just until this segment, if you only traded these 5 90-minute areas, right? Monday, Tuesday, Wednesday, Thursday, Friday, you could have had 1, 2, 3, 4 trades. Out of these 4 trades, I probably would have only took these 2, this one and this one.
They're most highly probable.
They're the most high probability. This one was high probability too, though. Don't get me wrong. This would have been real nice to open up your London, like London open on a dot. You was able to get a trade. So that's high probability as well, because everything matches with the balance and all. But these 2 trades would have been only trades that I would have taken, and I'd have been good with just those 2 trades. I mean, they're high RR. So after taking partials and everything, I probably made 7 R on this one, maybe take 5, maybe 5 R. So this one, maybe take 10 R out of this, and then I'd be good. It's not always clear in the midst of it being a live market, but if you tend to put all these pieces together, especially balancing the markets, you start taking less losses. You know, I take losses too, so I'm human. I take losses as well. I'm always gonna let y'all know that I take losses too. So don't stress yourself out when you take losses. The plan could be really good, but we're still dealing with human psychology. So as we still dealing with our human psychology, we have an fear of missing out. We have FOMO. We have all these different things that we have to deal with and have to plan out. So don't trip about taking losses. We all take losses. As long as you stick in there and you make sure you try to stick to your rules, you get a trade like this, all your losses instantly disappear. You take a trade like this, all your losses instantly disappear. And you're protecting your capital because let's say this, if you were taking 1% losses every time you, like say you trading and you're risking 1% every time you trade, right? If you imagine that if you took this high after taking 3 losses, let's say you took 3 losses, this is your first, now you got this trade, this is your first partial point. If you take 0.5% off right here, you made 5%. So now you're up positive 2% right now. If this starting to make sense, like psychology wise, if you took, let's say you traded, you try to trade, let's say you try to trade this balance, you lost here. Okay. Let's say you try to revenge trade here and you started being in profit, but you didn't take no partials and now you lose here. All right. Let's say you thought it was a sell and or whatnot, and you took a sell here and then the market take you out. Like all these different things that occur in the market when you're trading live, right? These losses could be made up for something like this. So if you would have caught just this trade and your first partial point could have been this high alone, right? Let's just say you want to take 50% off. That's a 1 to 5. I mean, a 1 to 0.5, 1.5. Okay. Now your next partial is here. So now you take another half of that. That's 2.5. So now you're up 4%. That the numbers add up when you start taking partials. They start adding up very quickly.
Yeah.
Now you leave a runner. And now you already know that this was your main target that you wanted to tap into. Now you take another quarter of that, and that'll be what? Half of that, just call it 10, half of that, 5. So let's say you just made 5R right here. So for the day, you made 9% for the day now, minus 3. So now you're up 6% for the day. You could be happy. Okay. Now I take partials. Partials are very powerful to start compounding and building your account. So yes, I won't get the full 1 to 21 because I know everybody wants the full 1 to 21 or they want the full 1 to 100, but that's just really not ideal. And it's not really, can't really keep up with that over time. If you chase a 1 to 100 for the longest, you end up losing 100% or 100R.
Yeah.
No, but imagine if you were thinking that you could hold this trade and you was looking to say, it's going to keep going till I take out this whole trend line, right? And, you know, this is what you're trying to do. You say, okay, I know we're bullish. We're going to take this whole trend line. Oh, you get excited. 1 to 75. So now you're going to take no partials. You break even. Now you telling me that you left all this off left all this on the table, and I got broke even right here. Stop loss break even. That don't make any sense. And nobody's doing that, by the way. Like, I don't know, like there's a lot of people that say they do that, but they don't do that. Okay.
Yeah, that's only for Instagram because it looks better.
It looks good, yeah, but that's people are not doing that. Okay. I don't want people to sit here lie to y'all and tell y'all they're doing that. They're not doing that.
If it's that easy, then everybody can make a living off it.
Yeah, like we was doing a trading calculator yesterday, right? If you had me and Hunter was doing it. If you had $1,000 account and you made 4% every day, now keep this in mind. This is how you start figuring out other traders and stuff. Okay, if we took a $1,000 account and we made 4% every day for 6 months, I believe it was like 26 million or something. It was crazy. It was like crazy numbers, right? I don't know nobody personally making that much money on not like that. I know some millionaire traders, but I don't know no one that's sitting here making that type of profits, right? Now that's not including withdrawals and stuff like that, because we do take withdrawals and all that good stuff, but still in and out. That tells you that if you can make 4% every day on $100,000, I mean on a $1,000 account, you should be in the millions in 6 months. So if we just stop trying to chase like high RR and we start looking at, you know, securing 1 to 5s and stuff like that, or even 1 to 4s, then over time, you're going to see your account compound. Okay, so nobody's trading 1 to 100s every day, 1 to 40s every day. Me personally, I don't believe it. I take partial. So my 1 to 20s will be like a 1 to 7 or 1 to 5 because I'm taking so many partials.
It's also better for my
psychology.
For my mind. Yeah, for my mind. Like I showed, I was in the short move on the top on GU, and I had only like 10% left till down there because I was scared to have such a big volume in it.
Right. Right. And that's the truth about psychology. Fear kicks in.
Yeah.
Because doubt always happens. Like we're groomed and programmed to have all these fears and doubts. So we have areas in the market sometimes we're doubting. We're take the trade because we're confident about the trade. But then once you're in a trade and this market starts to do stuff like this, oh, you're doing good. Oh, hold on. And then the candles are slow. And it's eating away at you. And now spread got you back in drawdown. That's enough to mess with your psychology.
Yeah, right.
Nobody really teaches this, but like there probably only very few people that talk about stuff like that. But this start eating away at your psychology because this pullback, it start making you feel like, damn, maybe the market balanced right here. And maybe I should be in a buy instead. So now, soon you get a little bit in profit, you probably go ahead and say, you know what, I'm gonna take a little partial just in case I'm wrong.
Yeah.
And then you start getting this pullback, and this might be a big enough pullback to say, you know what, I might be wrong. I'm gonna cut the trade. Like that's how psychology works, and how it could affect you in your trading.
So, yeah, that's why I want to work a lot more with directly entries from the 50 minutes with 1 minute refinements.
Yeah.
So I don't have this problem.
Yeah, but some of y'all may just need to trade higher time frame. Like honestly, maybe just leave the lower time frames alone and practice just higher time frame first. Okay.
Yeah.
Okay. All right. Let's just do this. So, can you imagine if you would have taken a trade like this? All right. We know that this is the breaker. This is the 4-hour breaker block, right? All right. So. Let's say, for instance, all right, we're on a lower time frame. You know what? Let's just see what this would look like, actually, just for shits and giggles to see what this look like. So, at a 15-minute, we tap in, we take out liquidity. We have liquidity here. Now, let's just say, you know what? I'm gonna just take this trade here. 15-minute. Candle, and then just cover the lows of the 4-hour. All right, and we're just targeting liquidity. So we look in here just to take out this liquidity. That's a 1 to 3. All right, that's not too bad on psychology because your stop loss is so far as protected. Your psychology is not tampered with as much. All right, that'd have been TP here. Or if you was looking to go up higher and tap into maybe more of a refined area, still 1 to 3. All right. Let's say, for instance, like this area. So tap the 4-hour breaker block. We had a high, right? We had a high that created a low. This could be our liquidity. So let's just say you wanted to trade just based off the liquidity, right? Higher time frame, this is your trade. You trade just cover the low and your stop loss under here. All right, for my people that like higher time frame trading. Now we know that, okay, maybe this high could be taken. All right, so you just take this high. This is almost a 1 to 5. When we go a little higher, that's a 1 to 5. This is a little bit more satisfying for psychology. Okay. A little bit more satisfying for psychology because your low is protected a lot more. So as the market is doing all these little movements, if you're taking trades here, soon you get into a little drawdown, you'll be more worried. This right here, you're a little bit more stress-free. because you know that, okay, I'm in profit. I'm in profit. It comes lower. I'm not stressing. Look where my stop loss at. I'm protected.
Yeah.
Now imagine taking partials every once in a while, like in certain areas, like this area right here. Even though this is what, a 1 to 3, you take partials here. If you took half of off, you made 1.5% right here. Leave the rest up to here to close full. So now 2.5, 1.5 is 3, that's 4. That's 4% for, that's 4%. Did I say that right? 1.5, 2.5. I think I said that right. I think that's 4%. I think that's correct. Yeah, 4%. So that you made 4% right here. So instead of making 5%, you still make 4%. Like, look what partials could still do. You only missing 1 R if you taking partials.
Okay.
That's crazy, right? Like, you're only
Yeah,
missing one RR. So you made 4%, and this was a little bit more stress-free for you guys that rather trade higher time frames.
Yeah.
So if we was to trade, let's say, because I trade basically balance, right? So look at this. We had a low that created a strong high, and look what happened. We're balanced right here. Okay. So if I wanted to, oh wait, hold on. If I wanted to use this whole thing as my area, all right. Look what you could have done on the 15-minute time frame. All right, we don't need a ping pong every day and all this stuff. I mean, it's fun to do and all that good stuff. I practice and study to do it, but this will be more logical, right? We have a trend line being built. This could be a potential sweep of liquidity, and we could get a reversal after taking the liquidity here. So this will be a partial area. Look at this. That's 2.5% here, a little bit more than 2.5%. I just don't worry about the last decimal number. I just use this number. So 2.5% right there. That's your partial. All right. And now you break even. The rest of it, you leave a runner. Okay. Yeah. We leave a runner to where? To the 4-hour breaker block. All right. This is higher time frame narrative. All right. Look at this. That's a 1 to 10. So that's the last 50% that you're running. That's 5%. You just made 7.5%.
Yeah.
It took you 2 days to do it, but think about that. I mean, if you put it on a funded account or whatnot, you know, $100,000, you made 7.5K in 2 days. I don't know if I will complain about that. That's pretty good. Okay. Market has not balanced right here. As we can see, market has not balanced, and we have a breaker block. Let's say instead of this 1 to 23, you could have taken this trade off the breaker. All right, like this. Now you're in the trade, and what we're aiming for, we're just aiming for this. We're aiming for first this low. So you could take partials there. That's a 1 to 2. So if you take 50%, that's 2%. You could take partials there. Again, what this is, that'd be 2.5. You could take your whole trade here. And now you up 4.5%. Or again, instead of taking partials there, we just aim for here. That's what? 3.5, 3.5, and then 2. So 5.5%. There you go. Higher time frame narrative. You can do this if you want to. If this makes it easier for y'all psychology, then do that.
Yeah. I think you showed us in the when I and Noah started, we were the first in the group.
Mm-hmm.
You showed us in the first call only the 15 minutes and 4 hours, so only higher time frame.
Yeah, only higher time frame. Yeah.
And that thing, I think that's why we are so good right now on the charts, because we understand higher time frame. And like, we waited 1 week, and after that you showed us how we can manage in the 1 minute everything.
Yeah.
And right now everybody's coming in and they see all winning trades in the 1 minute, and I think,
yeah, and they don't understand the higher time frame.
Yeah, and they think, yeah, I need to stay in the 1 minute and take every move.
Yeah, I hope this call helps a lot as far as looking at higher time frame, because you could just trade one time frame.
Yeah.
You just get less trades, but I always refer to having a higher time frame and then a lower time frame. So even if 15-minute is your lower time frame and 4 hours your higher time frame, then cool. Now, if you want to, we could go deeper than that. Let's see, go to this, and then we could go to, right? Delete all this stuff. Oh, you can tell this is an old chart. I have way like SMC stuff on here. All right, so if you wanted to, you could use like weekly, which I wouldn't. You wouldn't get too many trades at all doing that, to be honest. So, let's just say you just stuck to the 4 hour, maybe, because I would say 4 hours always been my favorite. So, if we go down here, like in the past, like I swing trade some of this. Like I swung from some of these areas, some of these strong lows. Like, look at this, man. Like this is a strong low. We had a break, no balance. The market needs to balance. Then it sweeps liquidity. So if you was to take a trade here, it looks very good if you didn't know this was a 4 hour time frame chart, right?
Yeah.
Now what is your target? Well, your target is first this high because this is where that low came from. Boom. 1 to 6. That's 3%. 3 RR if you took half off right here. And then the remainder you could have took here or just leave a runner. All right. And then what we're aiming for, if we go to the daily time frame, what's the next area that needs to be balanced? If we look, okay, if we trade up, what's the next area to be balanced? Here. All right. So you could trade to here. That's a 1 to 12. You could take some more partials, and then the next area, we see that the market just continue to go. This is the next area that I'm looking to balance. As you can see, we balance, we get a rejection. That's a 1 to 17. Take more partials. Now, what's the next area? Well, I don't see anything here, nothing much here, but I do see that this needs to be balanced. We just balanced this area. So now this is a 1 to 24 on a 4 hour time frame, but you're taking partials along the way because all these areas, as we talked about, external, internal, we don't really need it. We just look at the balancing points. This point is a strong high. It needs to be balanced. We balance. You give a small reaction. We continue. All right. We could have held a trade like this.
Yeah. It's good for people that work 9 to 5.
Yeah,
you can still make a lot of money with it.
Right. So for the ones that's a little bit more like high, I'm a little bit more, I break the market down a little bit. I might find this area, and let's say I might see that I want to find a 15-minute area in here. Okay, just for me personally. Okay, I see that we broke out, we made this low, we continue. So we may need some balance in here. Let me go to the 10-minute. Excuse me. So I might trade like this. This would be my refinement. Okay.
Yeah. I do it like that also.
Yeah. So now maybe I get tagged into this trade. All right. Boom. Nice. Tagged in. Don't get stopped out. So for me, this might be my trade, right? And I'm still covering the same low. Still covering the same low as the guy that entered on 4 hour. Now this is a 1 to 79. Now this will look good on Instagram. Like that look real good. I'm like, oh yeah, I made a 1 to 79. But I took partials. We know we took partials. Right? We know we took partials at this high. We most likely took partials right here, right? After we sweep liquidity, we took partials there. We come into the next balance point, we took partials here. As you notice, all my partial points tends to cause some type of reaction, right? That's why we partial there. There's your reaction. We don't know if this particular area will cause the market to go lower and take out maybe that liquidity. Who knows? All right. Look. Balance. Look what happened. You get a reaction off of balance. These is how we hedge our trades. Okay. For those that want to ping pong, you can do it. You can ping pong on a higher time frame. Use your balance, get the reaction, trade the reaction. Understand the reaction won't give you a lower price down here, but it gives a reaction. That's why we take partials and we break even. Boom. All right. Next point. All right. We see that we need a little bit balance right here. This is liquidity. Oh, look at that. What a coincidence. We get a reaction. All right, everything's filled. We won't get no reactions here. All right, we might need something to be balanced around this area. See, maybe this candle right here. So, something like this. Oh, look at that, a reaction. Nice.
Yeah.
These are, and it's on a 4 hour. Y'all don't have to trade these small time frames. You can trade the higher time frame. As a retail trader, retail traders trade higher time frame. That's why they the ones that are profitable, they have a high winning rate. All right. Their strike rates are like 80, 70, 80, 90%. Like it's some ridiculous, stuff that happens. But there you go.
Yeah.
Look at this. Balance. Look, break, high, low. We need to balance. This need to be balanced. Look at this. Another trade. Oh man, you could have been stacking entries on a 4 hour time frame. This one trade right here is done for the year. You're done for the whole year. Now this is just a bonus. Right? This is just a bonus. Look at this. Partial area, 1/4. That's 2% you take right there on a 4 hour time frame. All right, you take partials here. Take partials here. Now keep in mind, while as we taking partials, we're still adding positions, because on the lower time frame, if you're looking at the 15-minute time frame, right, for the areas that sweeps liquidity and that needs to be balanced. Oh shoot, my bad. Let me lock this in place. We got 1 minute left, so I'll just make this quick. So 15-minute, you see that this area right here needs to be balanced. Look where it's at. Breaker block tapped in. That's another entry. So that's another scale in. All right, we go up higher. Look at this. Break need to be balanced. We come back. That's another entry. And now you can just keep trading a 15-minute from here. Like this need to be balanced. That's balanced. Boom. Go up higher. This breaks out. Never come back. Needs to be balanced. Balance. All right.
Yeah.
Balance. You could just trade this. All right. So that I made that pretty clear for everybody. I need more than UZ responding to me, by the way. Everybody, do y'all understand everything?
Yeah, it's clear for me.
All right. What about everybody? Anybody else? Yes, no, maybe so. Even say it in the chat, something.
Yeah. Well, some issues, I'm still learning everything. So sometimes things are clear and other times I just hadn't gotten to that material yet.
Yeah, it's all good. But, all right, y'all, we have less than 1 minute. I hope it helps some of y'all out. So y'all have questions, just leave the questions in the Q&A and I'll catch y'all later. All right.
Yeah.
Appreciate it.
Thank you.
All right, later, guys.
Bye.
All right.